So looking at the bonds. All right, so let me make sure we got what happened overnight. So you sold 157 calls for a handle and a half.
Yeah.
So you've got 2 units of calls.
Have 1 unit of a call against two longs.
Okay. So you've got those 2 units long, one call against it. And so what's the plan from here?
Well, the weekly is actually at 157.11 to be exact. We just
Yes.
hit the 4 hour high and the daily dynamic range at 156.31, and we're coming off. However, if I look at the 15-minute momentum, it looks like we could actually squirt higher if we hold the 156.16. And on the 4 hour, it looks like even though there's resistance where we just hit it, the 156.31, 157, it looks like it can still push higher.
Yes.
So the plan is to take off another long two ticks in front of the weekly. So the next target is going to be 157.09.
All right.
And then once we get there, I will start trailing the stop on the remaining long a little bit tighter.
Where's it at right now?
Right now it's at 156.
Okay.
So I'll drag it up, but I'll measure a pullback area that should hold when we get up to the second target.
So how do you manage this call? So you've got this call that is almost at the money now. You've got a handle in it. What's the expiration on it?
The expiration is, let me take a look. See, it's the November monthly.
Okay.
That call is currently down about $400, but the single contract is up 2,000. So there's still a $1,600 profit even if I chose to take off the call.
Sure.
Um, but I think I'm going to leave the call only because we're getting, even though the bond is still bullish, we're getting into a very overbought area. And barring anything, happening crazy, I don't expect that we would break that weekly.
Okay.
And if we did, basically what I would do is trail that last option up, the last part of the position up, and I would hold it unless we close below that weekly, if that makes any sense. Because if we have a failed weekly break and extend, then we can expect that the bond would start to rotate back down towards next week's weekly
Pivot.
balance, which is already like 155.10.
Right.
So that would be in that area would be where I would look to maybe get long the bond again for another move up and take off the call.
Okay.
So, but right now, we don't know. All I know is that it looks like intraday we have room to go up more, but I don't know, judging from the daily, how far past that weekly we would actually get.
So this is always an interesting thing for me. We sold calls against a position, which gives you basically got a handle and a half in your pocket.
Right.
So
So, I mean,
they can't
basically,
hurt
where
you
I'm
to.
going to start losing, if I stay long, and say, for example, the bond ends up, breaking out and having a range expansion up, and we're going to have a weekly break and extend, and we're going to start looking at monthly targets, I'm going to lose opportunity just shy of the 160 mark, which is fine.
Right. I mean that. Yeah. I guess my question is, what do you do with it? So let's say we get up to 157 half,
Hmm.
and it starts doing what we expect it to do, which is finding some resistance and maybe start heading backwards.
So what I'm going to do is that if we get, say, we get a failure of the weekly break and extend, that failure and that high is going to be my line in the sand, and I don't see any reason to take the call off
Right.
unless we reclaim that. And then I would just either A, take the call off and accept the small loss on this old, the protection,
Yes.
or I would, look for an entry to buy the bond again. But that the failure, if we weren't so overbought on the daily, it would make me more nervous about a weekly break and extend. But from a probabilities point of view, that weekly would hold, and we'll at least get halfway back to the 155.10 area. So even if we got back down to 156 and we found an intraday buy signal, the call could come off for either flat or a slight profit.
Right. If we get back down towards where your trail stop is right now,
Yes.
the call comes off for nothing basically.
Right, because the call right now, if you look at the delta on the call, it's only at 49. So it's still, even though it's not
It's got enough
a
time
very
on it
high
that
delta.
right. The deltas aren't getting crazy yet.
So that would be okay.
All right, so from a trade management perspective, your fantasy is you're going to take one at 5709, just kind of front running that weekly area,
Mm-hmm.
and then you'll have a runner that is in a covered call scenario with a break even of 58 half or so.
Right.
So that's your maximum profit up there.
Right.
And then to the downside, you're trailing a stop at 156, but we're all getting a little nervous here. This happened very quickly. I mean, I thought this trade was, we were going to be chronicling it over the course of a week.
It's
And
not a day. Well, so did
I know,
I.
two
I
days go
thought
by and
next,
we're done.
but with the market the way that it's coming down, the bonds are obviously getting activity. And the interesting thing is that even though the ES hit a low of 1907, we have multiple time frames suggesting that we're going to go into the 1904, 1903 area.
Yes.
So that could be the catalyst that pushes the bonds into a new high scenario. Because if you look, even though we hit the 157 area, the bonds really haven't pulled. They've only pulled back, 5 or 6 ticks.
Right.
So
Yeah,
they're
I think
starting to
any
kind of,
more pressure on the equities, and we're guaranteed one more solid push on these bonds, at
well,
least to that
exactly.
157.3 area.
Exactly. And then we have to look at, we'll look at the markets and, determine whether or not that it's support that's going to break or support that's going to hold. And then we can, analyze the intraday chart in the bonds. But for now, there's no reason to be concerned with the long in the bond.
What are you looking for to move that trail stop? That's my final question.
I would probably start trying to move it if we broke through the 4 hour high, which is at 156.31. And then what I would do is I would move it up to 156.10. So I'm going to give it, 20, 22 ticks on the trail stop. I think that's reasonable at this point.
Okay.
So we're guaranteed over $1.
Yeah.
For 24 hours, that's good work.
Well, I mean, even at 156, you've already locked. So you've taken basically three quarters of a handle. Your trail stop protects you for a handle and a half,
Right.
and then assuming that trail stop gets popped and you flatten the calls were free. The call was free
Yep.
against the runner, so that'll be even if worst case right now it's a three handle trade,
Yep.
and when you start moving that trail stop up, you're locking in another handle at every half a point.
Exactly.
Okay. All right,
So
that makes sense.
yeah, I mean, ideally, this will be the cleanest, a clean trade, and we'll, get our profit targets. We'll get the weekly sales break and extend, and then we can kind of just manage the call to the downside until we get to a support zone. And here we go on the bond. It's starting to break up, and it's going to challenge that high.
Yeah, we're about 10 minutes out. They're already pushing on it. I think everybody knows what's going to happen. That we've got European news that happened that kind of kicked this whole thing off, and it's macroeconomic news. So whatever's happening is going to have follow through. That
Exactly.
I think you're going to get that fantasy print of that 157.10 area,
That
and
would be nice.
then
We'll go from there.
we'll go from there.
Can bar on crude